I have done it. I've actually done it. Last Friday, I told you that I wanted to buy Lululemon. And I did. And in this video, I'm gonna explain to you why and take you through my analysis as to why I think this company provides a good opportunity for future returns. Now, welcome back to Growing Quality. My name is Elian, and let's just dive straight into it. Now, let's start with the basics so we all know what Lululemon does and we all talk about the same company. We have the same idea of this business. Now, Lululemon sells their products through 711 company owned stores. So they are a retailer. And besides those 711 company owned stores, they have some partnerships with franchises, such as Mexico, for example, or Israel. And they also sell their products online. Now, the company does this through an omni-channel style in which you can order the products online but get them delivered at a shop, for example, at one of the Lululemon locations, so you can pick up the products there. You can also check at one of the retail locations for inventories they have at other locations, and then they can cross those over so they can actually make sure that the inventories from another store get delivered to you at home. Now, Lululemon started as a company that made yoga pants and has since evolved into multiple variations of athletic wear. And their latest path of growth is stepping into the shoe game as they are now selling running shoes. Now, I know it might not be the most exciting part of a research, but we have to talk about the executives really quickly because these are the people that you hand your money to and who have to run the company for you. Now, what stands out at Lululemon is that a large part of the executive base is female, and this is something I find really fitting to the brand and something that stood out to me and what I thought could be said for once. Most of the time, I highlight three executives, mostly the CEO, the CFO, and someone else. But at Lululemon, I found the roles so telling for the executives that were in those that I want to highlight four of them, four of the executives. So we'll get through them quickly because after the executives, we get to the balance sheet and the growth. So after this, we get to the exciting part. So let's just go quickly over it. Now, as the CEO, we have Calvin McDonald. And Calvin has been CEO since 2018 after he was CEO of the Americas of Sephora for almost 5 years. Now, Sephora, as you may know, is a retailer that falls under the LVMH brand or group. So, yeah, coming over from such a large player, I think he really fits the role. Now, next, we have Megan Frank, and she's been with the company for 7.5 years now. And before she joined Lululemon, she was vice president merchandise planning at Ross Stores for a little over a year. Now, San Chu, the chief product officer, has this role for over 5 years already. And then when we go to Nikki Newberger, the chief brand officer, she's had this role now for about 4 years. Now, what I like about Nikki is that she was also global head of marketing at Uber, at the Uber Eats department. And she's been with Nike for 14 years. So that's quite a long stint. So now that we have got the boring stuff out of the way, we can look at the fun parts. We're going to talk about the growth because this is a growth company. We're going to look at the balance sheets. I'm going to give you a bull argument, a bear argument, and I'm going to give you my conclusion and why I bought some shares in this company. Now, starting off with growth, we can see that in the Americas, Lululemon sales have grown by 40% in 2021 28% in 22, and 12% in 23. Now, I think the growth of 40% may be due to the after effects of the lockdowns, but it is very impressive still. And then we have mainland China, and this is a large growth opportunity for Lululemon. In 21, they grew at 80%, 32%, and 67% in 23. And this is also where the company sees the growth going for the coming years. They think that mainland China is one of their main growth drivers. Now, then we have the rest of the world, and this grew at 36%, 37%, and 43%. But what is most importantly is how these sales are divided. So Lululemon gives this nice circle diagrams, and where the Americas for 85% of net revenues in 2021, it came down to 79% in 2023. And why is this important? Well, that basically comes down to dependency, because right now sales in the US might be slowing down, but as other parts of the world are picking up, I mean, that's still a good thing. So that's why it is important that they keep the growth going, mostly in mainland China for now, and that the rest of the world also picks up, so they become less dependent purely on the Americas and Canada, and be less dependent on hype. Now, one thing that I really like about the Lululemon executives is that they have a defined growth strategy. This strategy is called 3x2, and it was implemented in 2022. A lot of twos there, but I didn't make it up. Now, what the intention is for this strategy is to have the 2021 net income doubled by 2026. So they set a 5-year period to do so. And the way they want to achieve this is by growing net revenues at a 15% CAGR. They want modest operating expansion. They want EPS growth to outpace revenue growth. And they want to grow square footage in low double digits. So that is store service. Okay. So this I really like, because having a defined strategy means that you will always be checked. So for fiscal 25, the company has guided towards lower EPS growth when we compare it to revenue. At least for Q1 25, they have guided towards 3 to 5% of EPS growth with a little more revenue growth. But for 24, they only guided for 11 to 12% revenue growth. Now they are still ahead on their targets, but it does give them some checks in order to make sure that they are delivering on those numbers. Okay, so then let's look at the balance sheet. Not the most exciting part, but a very important one, because a weird looking balance sheet is a big red flag in an investment. Now, Lululemon's balance sheet looks very healthy to me, because they have a lot of cash also going up from last year, and their inventories are going down. Now, they still have a lot of inventories, but they are trying to reduce it bit by bit. So that's a good thing. Now, what else do they have? They have a lot of plant and equipment, but that is to be expected from a retailer. They have some very big warehouses which they operate, and yeah, they have quite a value, of course. Now, what else do we have? They have an unredeemed gift card liability, which they nicely state on their balance sheet, and this is going up, but we can expect that because people are handing out more and more gift cards, and these just don't always get redeemed. So it makes sense that that is going up. Now, what other things stand out is that the stockholders' equity, the difference between the assets and the liabilities, are nicely going up, and they look very good to me. So that's their balance sheet. Now let's go to the bull and bear argument, and then my conclusion, and I will explain to you why I bought Lululemon. Okay, so for the bull argument, I have mainland China growth. Now I know this slide might look a bit empty. In my full report, I have at least 3 bear arguments and 3 bull arguments, but I'm gonna give you one here, so I leave some for the report. Now, why do I have mainland China as my bull argument? Well, we could see that the growth there is very strong, and although by far not to the level of the US or the Americas, it's becoming more important to the company. Now, we also know that those Asian countries, especially China, they love those North American businesses or retailers because they also very much love Costco. I mean, just look at the videos of them. But I think this will be a very important growth driver, and they still have a long runway of growth in that country. And there's a lot of market share to take. And I think that Lululemon, especially with the name, it was created for the Japanese to sound very Western and be different to pronounce. I think it will be having the same effect on the Chinese, quite possibly. At least they will see the hype of the North American women that wear the typical Lululemon legging. Anyway, I think that mainland China has a lot of growth ahead of it. And that's why I wrote it down as my bull argument for this video. And once again, I have 2 more bull arguments in my report. But once I release that, you will just have to check it out there. And I will link it somewhere in the description below. Now, then we have a bear argument. And that is that there is a lot of brand driven sales. Lululemon really has to do it on their brand, and they have a good brand. So that's a good thing, but they are brand dependent. And with the premium price they have, it's critical to keep that brand and to get it to a community. This is not something I necessarily see as a bad thing, but it is somewhat of a threat to the business because brands are, well, very fragile and they can be destroyed very quickly. So I do see it as a bear argument, but more so as something to keep in mind when you think about buying Lululemon stocks. Okay, so as we have gone through my analysis or through parts of my research of Lululemon, what made me buy the stock? Because there have to be reasons for it other than that I just like that they have a growth strategy. And that's for one, the stock price. Recently, Lululemon has been falling a lot. The stock is down about 30% from its highs. And looking at their PE ratio and forward PE ratio, it's trading relatively cheap. Now, I also see the macro environment improving, maybe not this year, but possibly next year. But I will get into that later. Another thing is the growth of the company or the EPS growth. Because next year this will disappoint, and that is why the company is selling off. And the question is this going to continue? Well, I see this going on during Q1 of 2024 or for Lululemon Q1 fiscal 25. But I don't know how much further it will extend. Because as Lululemon is a premium brand, the typical consumer of Lululemon might not feel the most of current market conditions or the current macro environment. And that brings me to the third point, and that's the consumer. Because the consumer might be in a bit of a difficult spot, that's giving fear into the stock. But I don't really see that happening for a long time. I don't really see a recession, although I might see some pain. I don't think a recession will happen. So then maybe we have some short-term issues, maybe a little bit less growth in the numbers, but I don't see it as a sustained thing. I think growth will pick back up and that we just have had a good buying opportunity. That's all I see from it. So, with that in mind, do your own analysis. I hope you liked this video. Please like and subscribe if you did, and I hope to see you in my next video.